Hi, this is Mitch with NHA. I'm going to be explaining to you today how life settlements are taxed. The first thing is I need to explain the difference between a viatical settlement and a life settlement because they are taxed very differently. A viatical settlement is when a life insurance policy is purchased from someone who has 24 months or less to live. There is an exception here, and so there is no tax on those proceeds from that sale. If you're expected to live 25 months or longer, then that's considered a life settlement and there are tax implications. So I'm going to be talking about the taxes on a life settlement. The first part of the taxes is going to be income taxes. And the way you determine the amount to be taxed is you take the cash value minus all the premiums paid. So you get to deduct the premiums because that was your essentially your investment to get to that cash value. However, you're not allowed to deduct the portion of the premiums that are considered to be cost of insurance. Cost of insurance is the portion of your premium that was there to make that death benefit available. The rest of the premiums are building up the cash value. And so the IRS considers you'd have already used that benefit because you had that death benefit for all the years you had the life insurance. So you take the $30,000 of cash value minus the premiums paid, and then you have to subtract out the cost of insurance because you can't deduct that. So you end up having a $25,000 sum that is taxable as income. So 25% of $25,000 is $6,250. The next part is going to be taxed as capital gains. So we had a $150,000 face value policy. It was sold for $60,000. So the gain is the difference between the cash value, which is what you could have surrendered it for to the insurance company, and how much you sold it for. So life insurance is viewed like an asset or an investment. So they're going to count that $30,000 as capital gains. So 15% capital gains tax of your $30,000 gives you $4,500 capital gains tax. So you take your $60,000 settlement minus your $4,500 in capital gains minus $6,250 in income tax, and you end up with $49,250 after taxes. So you need to work with your tax professional on the specifics of your situation, but this is a general description of how the taxation works for life settlement transactions. So feel free to contact me with any questions. Again, this is Mitch Kuhn with NHA. Thank you for listening.